What's up, my YouTube fam? I'm back. This is Larry with Invest and Build Your Credit and Wealth. Today, we're going to be talking about FICO scores. I don't understand how people, even in my industry, don't talk enough about FICO scores. You have to understand about FICO scores to help truly improve your credit and how things are scored on your credit report. And some people work on things that are not even affecting your score, right? Instead of focusing on other things to build your score. So we're going to talk a lot about FICO, all the different FICO scoring modules. We're going to cover some of them. We're going to cover some of the details about it. We're going to dig deep in the FICO to give you a better understanding about it. But first, I always want to say thank my new subscribers for coming to the channel. I appreciate y'all. You know the deal. Hit the thumbs up, share, like. Share, like, hit the thumbs up, subscribe, share, like, however you want to put it, reverse, backwards. But hey, show your appreciation of the channel. I like to grow this channel. I mean, I'm giving real information. I should be having multiple subscribers. We need more likes so, you know, YouTube push these videos out. Because I'm telling y'all the truth about credit. I'm honest, upfront, and that's what it's all about. But, you know, if nobody wants to give me a like and nobody wants to share the channel, it's okay. Still love y'all. And I'm still going to be bringing y'all good information because I've been where y'all been. And by me understanding has totally changed my life, how I deal with money, how I invest my money, how I look at opportunities to continue to grow my wealth, all because, you know, I really took a focus on my credit, which opened up so many other avenues. And that's why I'm bringing y'all this information, because I want y'all to reap the benefits of having good credit, right? So you know the deal, subscribe, like, share. You know, I get that stuff, get tongue tied. So, but I appreciate y'all and thank you for hanging out with me and listening to these videos. So now, let's get into it. Why is FICO so important? FICO is the different models score your information that is reported on your credit report. That information is passed on to potential lenders, stuff like that, to see what is are you a credible borrower? You know, are you more likely to default on a loan or pay a loan back? That's what it's all about in a nutshell. Creditors want to make sure if they loan you something or give you something, that they're going to get it back in return and make money off of you. They can't make money off of you if you're going to default on the loan, right? And that's the objective. You have to realize credit, people give you credit to make money off of you. So how you use that credit is a determination of how much money they're going to make off of you, right? Think about that. Credit is for a way for business to make money off of you. How you deal with your credit is going to determine how much money they're going to make off of you. So understanding credit, knowing how to use credit, you can flip that credit and put money back into your pocket and minimize the amount of money they're going to make off of you, right? So that's why it's so important. So let's get into it. The first thing, and I'm going to read a couple of things to you. So you see me look off, I'm reading the notes I wrote down because it's a lot of information. FICO has created an algorithm, right? Of the name, and it's dealt by different lenders in the United States, used to find credit scores when you apply for loans. The company releases an updated version of the algorithm to lenders every few years. So we're going to talk about FICO 2, 4, 5, FICO 8. We're going to talk about FICO 9, and we're going to talk about FICO 10 and 10T. We're going to talk about the differences in them. We're going to talk about which one lenders use, why they use them, how slow lenders are to advance into the next FICO algorithm that has been produced. I'm going to talk about all of that. Since lenders are not required to use the latest versions of FICO, it is important to understand how the algorithm differs, as your score will be altered. In this, we're going to talk to you more about all these different things. So I'm going to guide you in an in-depth at the most commonly used versions of FICO. All right. What we're going to talk about, what is FICO 8 versus FICO 9. What are the oldest FICO models and how does FICO differ from other FICO scoring modules? We're going to cover all of that. All right. FICO 8, you have, these are all the different score modules. FICO 2, Experian, right? And that's a mortgage FICO score. Mortgage lenders use the oldest versions of FICO. They use FICO 2, 4, and 5. FICO 2 is Experian. FICO 4 is TransUnion. FICO 5 is Equifax. FICO 8 is all FICO 2, 4, and 5 all combined, right? What FICO 8 is mostly used for is auto and bank card lending. So when you try to apply for a credit card, they're pulling FICO 2, 4, and 5. They're combining it into FICO 8, come up with your score. When you go get an auto loan, that's why you see all three of those. That's why you get pulled from TransUnion, Experian, and TransUnion. Equifax, Experian, TransUnion. You're like, oh, they're pulling off. That's because they pulled your FICO 8, right? Because that's a combination of FICO 2, 4, and 5. Understand that. But when you go get a mortgage, they pull those old versions. That's why when people go get a mortgage, they look at their regular FICO score, they're like, why is my FICO score different? I had a 650, but your mortgage FICO score said you had a 590. It's because that's a different scoring model. They're not doing FICO 8. They're pulling each individual FICO scoring module from each individual credit bureau. So I hope that taught y'all something about that. FICO 9 is a newer version, but it is not widely used, right? So come notes. When you go apply for a card and you call in your bank, credit union, all that, find out what FICO scoring module they're using. If they're using FICO 8, it'll get you better understand what they're going to be looking at on your credit report. And that gives you a better understanding. When you go look at your credit scores, you can see, what is by looking at my credit score, do I think I'm going to get approved or not approved? And we're going to talk about some of the key things about these different models of FICO, right? So how FICO 8 is calculated. Now, remember, people think all the different FICO scoring modules use this calculation. That is not true. FICO 2, 4, and 5 doesn't calculate their scores like FICO 8. This is a FICO 8, right? Listen what I'm telling you. FICO 8 uses these 5 components to accumulate your score. So a lot of times people are thinking that, TransUnion is using that same scoring for your score and Experian. No, that's FICO 2, FICO 4, right? So they're not using that. But when you talk about FICO 8, these are the 5 components. Payment history, 35%. Utilization, amount owed, 30%. Length of credit history, 15%. New credit, 10%. And credit mix, 10%. Those all accumulate your score for FICO 8. And I don't want to complicate it. FICO 8 is the combination of FICO 2, 4, and 5. So I hope I didn't confuse y'all on all that. But you better understand all of that to understand how your score is calculated to give you a better opportunity to improve your score, right? So FICO 8 versus previous FICO scoring modules. We're going to talk about that. So listen, FICO 8, what do they punish you on? So pay attention to this. They reduce the impact of authorized users, right? So what they're saying is in FICO 8, if you're being listed as an authorized user on someone else's account, used to mean that their entire account history would be copied over to your credit report, to which it could be a great thing, right? So it'll be great for authorized users. That's why you hear a lot of people talking about add an authorized user to your credit report. When me and my wife was building credit, when she got a credit card, I got a credit card. When I got a credit card, she got a credit card. So we double rammed it. We was building up our stuff. Now, it's a whole different story. Now she be over there charging. I'd be like, girl, get that off my credit. Take me off that authorized user, because you using that card, you dropping my score, right? And then she may say, you done bought something for that card, man. You lowering my credit score. You need to take me off that. I'm like, no problem, baby. I got you. I'm gonna call them tomorrow, take you off, right? But when we were building, and we was in that process of building, we did both. You'll hear some credit people tell you, I don't approve of husbands and wives. Listen, I'm going to keep it real with you. If you with a spouse and y'all can't trust yourself to build something, what are y'all doing? What are y'all doing? So me and my wife, we had a plan. Our plan was to build our credit, grow our wealth. So when we were building, when she got a credit card, I got one. When I got a credit card, she got one. And that's how we steadily, so we're both making good payment, and we're putting that good history on both of our credit reports to help us build our credit report much faster. So think about that. Okay, the next section is reduce the impact of infrequent late payments. So you can't have late payments on FICO 8. They're going to punish you. If you have a late payment, 30%. If you're using all your credit cards, 35%. That's 65% of your score on average. That is not exact science. It's on an average, a national average, right? But that's 65% of your 2/3 of your score. Of course, your score is going to get punished. Even if you got, decent, good credit, that late payment, those late payments and utilization will plummet your score. So I've already talked about that. I don't care if you have to float it on that 29th day, make sure you pay that bill. Never let a 30-day late payment get on your credit report. All right. The other thing, the increased impact of high balance credit cards. So FICO 8 is going to punish. We just talked. They're going to punish you for having you got a $500 credit card and you're using 400 of it. You're going to get punished because you're in debt. And the creditors look at you in debt. You can't manage a low balance credit card. And that is a $500 considered a low balance credit card. You can't maintain that under 30%. So why would a creditor give you a $10,000, $20,000, $30,000, $40,000 loan when you're having a hard time maintaining a $500 credit card? I'm just keeping it real with you. Got to be honest. Honesty is the first level of improvement, right? So if you can't manage that, how do you expect somebody to give you that type of money? And the people that do give you that money, they're going to take a rate and they're going to rape you into a corner. That's what they're going to do. And people need to understand auto loans, any kind of loan, their interest front heavy. So say you have a $300 note and you got an 18-20% loan. So at first payment of $300, they're probably taking $270 of the interest up front and only applying $30 to your balance. That's how they kill you. So they're trying to hurry up and get their money before you default on that loan and quit making them payments. So let's keep it real. So that's why the other reason why you don't want those type of loans. At all costs, you try to avoid them. You focus on your credit, get your credit right so you don't get those type of loans. But that is what creditors look at, especially when you got them whole low balance credit cards and then you carry on high balances, 30%. $300 credit card, that's $30. You should keep, every time that credit card reported should be no more than $30 on it, right? That's what you have to look at, okay? So let's continue on. We're going to get a little deeper in this FICO 8. I'm going to read some things to you because you need to take notes on this. One of the most important aspects about FICO 8 is that it's most sensitive to high utilization credit lines, which compared to previous versions of FICO, right? It's sensitive to those people that carry high balances. We recommend that you stay under 30% credit utilization to keep your FICO 8 score from dipping due to high utilization. So if you're carrying those high balances, your FICO 8 score going to punish. I'm trying to tell you, right? On the other hand, FICO 8 has a positive change for consumers as well. Accounts in collection with balances under $100 are now ignored by the FICO scoring. So I'm a credit repair person, and I tell people this. So if you go to a credit repair and you got a collection of $58, FICO 8 ignoring that, it ain't affecting your score. You feel what I'm telling you? It's not affecting your score. That's why I try to tell you. A lot of times people think because it's a negative, it's affecting your score. It don't always affect your score. But I'm going to tell you what it does affect, right? So it's ignored. Previous, all collection accounts were factored into your FICO score, no matter how small it were. Additionally, FICO 8 is more forgiving to one off late payment of 30 days or more when compared to previous versions of FICO models, as long as other accounts are in good standing. So sometimes people say, they come to me and say, hey, I got one late payment, I want to get that off. FICO 8 ain't worried about that one payment. Not that one. As long as your other accounts are in good standings. Take notes of all this. This is the powerful information you need to understand your score. There are two subversions of FICO score, FICO 8 score, FICO 8 Auto and FICO 8 Bank Card. As you expect, lenders use FICO 8 Auto to assess credit worthiness for auto loans, and FICO 8 Bank Card at credit worth for new credit cards. Now, if you ever download the Experian app and you pay, I think it's $9.09, they would give you all your different FICO scores, because that's what Experian do. Experian collects all the different data and then places it into a FICO 8 score. Y'all didn't know that, but you know it now. So when you download that one app, and I'm not affiliated with Experian or they slide me $2.50. Ain't none of that. I'm giving you the information you need to be able to understand how to improve your credit. Right, I'm giving you these nuggets. So if you download the app, pay, I think it's not, because I have it, the $9, my wife has it. So if you go on there, you're going to see your regular FICO score, and then there's going to be a section to say good, fair. You hit that button on there, it's going to break down all year. It's going to break down your mortgage FICO score, your credit cards FICO scores, different. It's going to break down all these different scoring modules, and your scores all broke down. You may have a 6, you may look at Experian and say your score is a 690, and then you hit that button, and then you look and you ready to go buy a house, and they say, well, your score is a 620. Mortgage FICO score is a 620. You're like, oh my God, what's going on? But you need to understand that, right? So there's different levels of all those scoring. So you want to apply for a credit card, you know what your FICO 8 credit score is, credit card score is. If you want to go buy an auto loan, you know what your FICO 8 score is for auto. A lot of people go and look at that. They just pull up and say, oh, my FICO score is a 6. They don't even look at what their auto FICO score is. They just take that general FICO score and they run down. And then when they run the credit, it don't match. You got to find out what your auto FICO score, if you apply for a credit card, you need to find out what your credit card FICO score is. If it's a mortgage, you need to find out from Experian, Equifax, TransUnion, what the scores are. And you'll be better off with what your mortgage FICO score is. All right. These specialized versions of FICO 8 scoring module are similar to the standard FICO 8, but emphasizes on the different parts of your credit history. For example, FICO 8 credit card places a bigger emphasis on your behavior with your credit cards. Your credit card behavior, how you pay, what kind of balances you're holding. Are you keeping low balances? Are you keeping high balances? That score looks at that. Then FICO 8 Auto, despite their differences, the FICO 8 Auto and BACAR scores will be largely similar to your standard FICO 8 score. Now, let's get into FICO 8 versus FICO 9. A lot of people are not using FICO 8. You can call your creditor and ask them what FICO scoring module they use so you can better understand how they're going to grade your FICO, your credit report. So you can ask them. It's not a secret. Ask them, hey, I'm curious. I was thinking about applying for a credit card. What FICO scoring module that you use? I'm curious. I think we use FICO 8. Okay, no problem. Let me look at my FICO. Let me look at my scores because FICO 8 is a combination of all FICO 2, 4, and 5. Let me look at my FICO 8 scores and see if I do want to apply for this credit card. Am I going to be looked at as a worthy person to get this credit from y'all? That's all you got to do. And then, so FICO 8 versus FICO 9, what are the differences? FICO 9 is similar to FICO 8, but differs when it comes to collections and rent payment. FICO now count medical collections less harshly than other accounts in collections. So a surgery bill in collection has less of an impact on your credit score than a credit card bill in collection. But that's FICO 9. A lot of people don't use FICO 9. Additionally, FICO 9 ignores accounts in collection that have a $0 balance. If you had a credit card account go to collection but later paid it off, FICO 9 will no longer use said collection accounts against your score. So in FICO 9, if you pay that collection of zero, they're not going to use that to go against your score. There's a difference in FICO 8, which factors all collection amounts of 100 or more into your FICO score, even if they're being completely paid off. But I tell my clients too, even that, it looks better on your credit report to have a paid collection than an unpaid. But I get collections off. You know, if dispute, we're going to get them off restrictive endorsement, get them off your credit report. So we're going to get them off, right? Just because collections have a zero balance as ignored by FICO 9 does not mean your lender will ignore them. So that's why I tell people, and I say it in videos, get off that credit score and get on your credit profile. What does your credit profile look like? Because too many people get caught up on credit score. You got negative stuff on there. Don't get caught up in the score. Get caught up on how do I improve my credit profile. That's what I do as a credit repair specialist. It's my job to improve your credit profile. Don't get caught up on that score. That score can trick you. And it tricks people all the time. They go out, they look at that score, they go apply, get denied. Because they looking at that score and not their credit profile. What is showing on my credit profile? How could I improve my credit profile? How could I get these debts and stuff off? Or how do I get them paid off, settled, so it looks better on my credit report? Finally, FICO 9 factors rent history into your credit score. This makes it easier for people with no credit to build a high credit score with their monthly on-time rent payment. Unfortunately, this is dependent on your landlord actually reporting rent payments to the credit bureau, which a lot of them don't do it because they don't want to become a member. They don't want to be paying no extra money. Some things not yet seen at a large scale. Most lenders have yet to adopt FICO 9 since it's still new to the market. This will change as time goes on. So smarter monitoring your FICO 9 score now to ensure you don't encounter any surprises as the years go on. You can pay to view your official FICO 9 score on FICO official credit monitoring service. I wouldn't worry about FICO 9 until you start seeing creditors say they use FICO 9. Unfortunately, there is no one offering a free FICO 9 score at this time. Nobody's doing it. I mean, you can take a guess, go out, and then go to the website, pull it up, see what it is. But right now, to be honest with you, a lot of people are not using it. They're still using FICO 8, which is an older version, and I wouldn't go out and pay for it. That's just me. But if you're curious, some people are curious, they want to do it and just see. What are the older FICO models? We talked about FICO 8, FICO 9 aren't the only versions in use. Some lenders and industry use older versions like FICO 2, 4, and 5. In fact, these are still used by the mortgage industry when assessing creditworthiness for new mortgage and deciding an interest rate. FICO 2, 4, and 5 are very similar. The main difference between the three is that 2, 4, and 5 use data from Experian. That's FICO 8. Remember what I told you? That's FICO 8. TransUnion, ECRA, respectively, and then the mortgage lender pull one of each and compile the report in a document called a residential mortgage credit report. Duplicate data is screened and removed, and the middle score of the three is picked to represent your credit worthiness. So anytime anybody that bought a home knows this, if you haven't ever bought a home, they take your high score, they take your low score, and they toss them, and they keep your middle score. So if you have a low score of, say, a mortgage score, you need a 630. Say you need a 620 or a 630. We're gonna say 630. So say you need a 630 to get into this house. Your bottom score is a 610. Your highest score is a 680. And your middle score is a 635. Bam, you in. Because they don't throw out that 610. They're going to throw out that other 660, 680. And they're going to keep that 635 and say, you in. Let's get started. So understand that, right? So, that's the difference between the two, right? The three. All right, so let's continue on. We got more information for you. How does FICO differ from other credit scoring modules? We're going to talk about this advantage score, like Credit Karma and these credit cards that try to give you these scores that make you frustrated because you think you got it and you go apply for something and they talking about, yo, that ain't your score. And you're like, oh my God, Credit Karma said my score was a 700. And you go to FICO and it says your score's a 640. You mad because Credit Karma didn't trick you. So I use Credit Karma for information purposes only. Just to see what's reported. It's free. I'll go on there, look at it. It's got some good value to it. I'll look at it, but I don't pay attention to that stuff. Now, there are some lenders like Synchrony Bank. They use a Vantage score. And you can go on and Google what does Synchrony use for their scoring. That's why a lot of people get approved for Synchrony cards. And there's a lot of them. Google it. A lot of people use Synchrony Bank for credit cards. A lot. So when you start getting your credit score to certain, you may want to switch over to that Synchrony, especially if your advantage scores are pretty good. You probably get approved for it. Vantage Scores is another popular scoring module like FICO. Vantage Scores 3.0 grade credit as 300 to 850 point scale and takes credit utilization, credit inquiries, and on-time payments into account. However, the two models differ in a few ways, with one major difference. FICO penalizes you all late payments the same way, while Vantage Score penalizes late mortgage payments higher than other late payments. FICO and Vantage Score also differs in how they handle combining similar credit inquiries. FICO, you have a 45-day grace period, while similar credit inquiries for auto loan, mortgage, and student loans are combined into one inquiry. Advantage Scores gives you a smaller 14-day grace period, which can make comparison shopping for loans harder. So let's continue on. FICO 8 versus previous FICO scoring modules. We're going to we talked about authorized users. It's a great impact. We talked about your late payments can hurt you. We talk about increased impact on late payments can hurt you. Higher balances can hurt you. But let's get into some other information. In the summer of 2020, the Fair Isaac Corporation, better known as FICO, released 2 new credit scoring modules called FICO 10 and 10T. We done got some more. We ain't even got the FICO 9, and they ain't added 2 more. The companies estimate that 40 million Americans saw these credit scores dip by 20 points or more points as a result. And I'm explaining to you why. And this 10T, a lot of people, because we're, as Americans, are so far in debt. So FICO is trying to figure out a way to punish you for being in debt, carrying too much debt, because we default on so many loans in this country, carry so much debt. So now FICO is trying to figure out a way to punish you, to help you reduce and force you to reduce your debt. Right? This is what FICO 10 10T is all about. You do your research, you'll see what I'm talking about. Who wins and who loses in this new scoring module? Americans with poor credit most likely saw their scores worsen, while those with good credit most likely saw their scores improved. Remember I told you about people being in debt. Of course, your scores is not written in stone. By understanding the new scoring modules and taking steps to improve your score, you can ensure you land among the millions who have seen a boost in their credit scores. Right? Now, both new scoring modules involve largely the same changes. The difference between the two is that FICO Score 10T model includes trending data. So it's starting to see, it's looking at your pattern and how you handle debt. And based on your trending data is how your score is going to be evaluated over the last 24 months. Trending data in the last 24 months. You've been accumulating a lot of debt in the last 24 months, your score is going to dip. It's going to dip because they're trying to stop you. Because now they're trying to stop you from obtaining any more credit, because your trend in the last 24 months is that your debt has been increasing. That means it analyzes direction a consumer has moved with regard to their debt. Ain't that what I told you? FICO wants to see if you have been paying down your debt or racking up new ones. Ain't that what I told you? The model pays particular attention to credit card debt, whether you pay your card full each month or carry over a balance month to month. In fact, both modules weigh your credit card debt ratio more heavily. The debt utilizes ratio in a percentage of your available line that you use. For example, if you have $1,000 balance on your $5,000 credit card, you have a 20% credit utilization. The new score model reward those with little to no credit card balances and penalize with high relative balances even more than previous scoring modules. So they really trying to punish you. It's just one more reason to get you out of debt. That's their whole purpose, is to get you from accumulating more debt and help you, force you to get yourself out of debt. FICO similar weighs personal loans more heavily, giving them their own classification for the first time. So this is what they're trying to tell you. And this is what people have been doing. They go out and they get a personal $20,000 personal loan, and they pay off all their credit cards with it. Now the utilization goes to zero, and now it hasn't changed their debt. Think about it. You took out a $20,000 loan, you just paid off $20,000 in debt, you just moved it around. You still owe the $20,000. FICO 10 say, all right, now, I see y'all taking advantage of this FICO 8, and y'all doing some little stuff to bust up y'all scores, raise y'all scores up. So we're going to come out with a new scoring module. So this is what they're talking about doing, right? So it weighs similar heavily, giving them their own loans, right? Their own classification for the first time. In 2019, experienced study found that personal loans make up the fastest growing debt in the United States, with over 305 billion owed. But what are they doing with that? Paying off credit card debt. The new scoring module aims to differentiate between borrowing who uses their loan strategically to pay down other debt using to consolidate loans, and those who simply start racking up more credit card debt after consolidated in a personal loan. You see what I'm saying? They trying to cut all that out. So all y'all people out there talking, I'm gonna give me a $20,000 loan and pay off this $20,000. See, FICO 10 gonna say your score ain't gonna change. I'm gonna look at you still owe $20,000 in debt. Now you just shifted. Yes, you reduce that utilization, but your personal loan get up. So maybe that scores go up, but this score gonna dip. So you ain't gonna have no better score. They're getting smart. That's why I tell you about. They're looking at trends and how even us in the credit repair industry are helping people improve their credit score. That's why you need to know all this stuff. See, a real credit repair expert know all this. So you listen to them jokers, y'all subscribe to them jokers, they ain't talking about this type of stuff. Feed y'all, and then y'all leaving me outside when I'm knocking on the door giving you the real information. But it is what it is. Finally, FICO 10 puts more weight on late payment history. Borrowers who fail to pay their bills on time every month should expect their scores to dip even further. I'm telling you, they trying to push this FICO 10, so y'all better be prepared. Y'all should be working on it, getting with the people that's going to help you get your score right. I know this is a long video, but I need to get all this to y'all so y'all can understand it. So you need to be paying attention and listen to this whole video, because this is a powerful video. All my videos are powerful. But anyway, let's move on. That FICO 10, y'all need to pay attention, because they're going to be pushing this FICO 10. Mark my words. They're going to be pushing this FICO 10. So it's going to be a surprise. So I hope y'all be preparing yourself. Right, now we're going to talk in a little bit about mortgage lending. Despite FICO 10 on a horizon, mortgage lenders use far older scoring modules. We already talked about they want to do FICO 2 from Experian, FICO 4 from TransUnion, FICO 5 from Equifax. Household debt increased $92 billion in the first quarter of 2021 to a record of 14.64 trillion, according to the Federal Reserve. As such, it's not surprising FICO plans to penalize high unsecured debt more in its new scoring module, right? And I'm going to tell you, a lot of these banks are going to start going to that, because people are defaulting on loans because of the amount of debt they carry. Banks are, and they're getting tired of writing off debt, sending this stuff to collection company. So I'm just telling you, it's going to be coming. It's just, are you paying attention? Whatever scoring module and industry use, your credit score has a surprisingly significant impact on your daily life. I tell you that, it could change your life. To me, and I'm being honest, your credit score can make more of an impact on your life than anything. It's going to have an impact on your kid's life. It's going to have an impact on your life. It has an impact on where you live, what you drive. It has an impact on where you shop. It has an impact on so much of importance of your life. And until people understand that, you will be left in the back room. I'm just telling you, you won't be out front. You're going to be in the back, where they ain't got no tables, no chairs, no nothing, and everybody that's taking care of this stuff sitting back in reclining, AC, drinking on a margarita, watching some TV. While all these people that don't want to take care of their credit are not taking it serious. We all been there. I've been there. That's why I push y'all to understand the importance of it. It will change your life. It will change your kid's life. So be understanding of that. It can mean a difference between a down payment of 3% versus 20% for your next home purchase, or an interest rate of 3.3 instead of 5.3. It's a big difference. It's a big difference when you talk about a mortgage payment. For example, my house in California that we had, we refined, interest rates dropped. Our mortgage rate when we first got our loan was, I think it was 3.3. I think it was like 3.3, and it dropped down to 2.7, I think. That saved us a month, $400. And then I figured it out. It may have been because our mortgage payment was like 33 something a month, and then it dropped down to 29, 28. It may have been like 400, maybe 4 or 5, somewhere. But I equaled it out. Over the life of the loan, I'd have saved, that house would have been $72,000 cheaper. Off them few point, not even a full point. So that difference is huge based on how much house you buy. While you have take this opportunity to pay down your debt and improve your credit, don't panic about the new model. Simply fact is most lenders won't adopt it for years, right? But it's coming. It's an opportunity for you to get your stuff right. Because when it do hit, man, if you've been around the curve, it's gonna hit you much harder. Your score's gonna dip even further down. And it may never gain popularity. May. I'm planning to, whatever happened, I'm gonna be prepared for. FICO 9 never gained much traction at all. It hasn't. They're still on that. But I'm telling you, the amount of debt, banks are gonna start looking at these different scoring modules, and it don't take but one big bank to jump in, and then all these other banks will start following. So just pay attention. Now, this is something powerful. You don't hear this. You only heard this on my channel. FICO scoring module, a partial model, certain things that they look at and points. And I'm gonna post this up on this video. It's gonna be up here. So I want y'all to take a look at it. Certain categories, payment history. Then it's broken down in the categories. It's broken down category, characteristic, attributes, and points. So it says payment history. Number of payments sent the most recent derogatory public record. No public record, 75 points. 0 to 5 public records, you're punished 10 points. So this is how many points you get. 6 to 11, 15, 20 to 23. These are late payments. All this deal with your payment history. 25, 24 plus, 55 points. It talks about outstanding debt, average balance on revolving trades. It says no revolving trades, you got 30 points. 1 to 99, you have 0, no trading, no revolving trading, you have 30 points. 0, 55 points. 1 to 99, 65 points. Now it starts punishing you. 1 to 140, 499, 50, 500 to 749, 40, 750 to 999, 25, 1,000 or more, 15 points. Credit history length, number of months in file. Below 12, 12 points. 12 months to 23 months, 35, 24 to 48, 60 points. It's been on your credit file for 48 or more, 75 points. Pursuit of new credit. Number of inquiries in the last 6 months. 0, 70 points. 1, 60, 2, 45, 3, 25, 4 or more, 20. So this is how it kind of grades you and punishes you. Credit mix. Number of bank card trade lines. 0, 15, 1, 25, 2, 50, 3, 60, 4 plus 50. So It's up on the screen. I'm posting it up. All this information, like I said, everything I find, everything I do, if I find more information, I always add it into my credit repair package. So if you're interested, you know the deal. Shoot me with an email. I'll get to the information, get it over to you. It's called the Master Dispute Package. It's $70. To me, I mean, I can help you build your credit, but if you have time to do it on your own, I'm more than helping you and guide you through it. Just buy the package and I'll help you out. Again, people that have reached out to me, they can tell you, I'll get back to them. I do give free credit analysis. I don't charge people for it. I give you a free credit analysis. No, you don't have to get my services after the free credit analysis. No, you don't have to do all of that. If you want to, that is your choice, but you do not need to. It's no strings attached, none of that type of stuff like that. My job is to help you. My job is to get you where you want to be, to get you where I'm at and pushing you forward. So, hey, I got to get off this video. It's been long, but if you have any questions or something that was confusing for you, you know the deal. Look in the descriptions, email me, I'll answer any questions. If you want to have a phone conversation, email me, we'll have a phone conversation. I will call you and we'll talk through your credit. If you want a free credit analysis, hey, hit me up. I'll give you a free credit analysis. I'm here to help, but you know the deal. Subscribe, like, share. Subscribe, like, share. So, hey, I appreciate y'all hanging out with me today. This is Larry with Invest and Build Your Credit and Wealth. I'm going to start talking about some stocks and some of my investments that I do too, because I want y'all to start saving y'all money and building y'all wealth too. But I know a lot of people want to improve their credit, so that's what it's all about. But hey, I appreciate y'all. Thank you very much for hanging out with me. Please smash that like button and please subscribe to the channel. And I'm here for you. I'll be back with another video real soon. I got some more stuff for y'all too. I ain't done. There's so much to this game right here. And I'm coming to bring it to y'all. So I appreciate y'all. Hey, watch this video to the end. I'm going to start giving out free giveaways. So if you can't skip to the end, because I'm going to put little stuff in all the way through the video. So all them people be trying to fast forward to get to the end. It ain't going to work. So I'm going to start hooking y'all up, helping y'all out. All right? So I see y'all, and I'm out.